So welcome to today's Chartist Corner Strategy session. My name is Yang. I'm the Chief Technical Strategist at FX Times. We usually do these Chartist Corner Strategy sessions there. Nick is also with us today from FX Times. He usually focuses on the fundamentals while I focus on the technical setups. So I'm going to go over some technical setups in the forex markets and see where what we can look for, what kind of developments there are, what kind of breakouts or retracements and such. Okay. Before getting started, let me read over the disclaimer. Information and opinions contained in this webinar are for educational purposes only and do not constitute trading recommendations. Forex trading involves a substantial risk of loss and may not be suitable for all investors. So we're going to take a look at how we're going to assess the markets with different angles. For example, what the structure of the market is, what the momentum of the market is, what the price action is telling us. Okay, so we start with the euro dollar here in the 4-hour chart. Let me actually switch over to the 1-hour chart. Hopefully you guys see that. Okay, so in the 1-hour chart, what we're seeing today is just the follow through of this week's correction rally. Okay, this is a very sharp correction and a significant one here. This is sort of a V-shaped correction, right? And then now you have a second swing developing. All right, so this second swing, if it's similar to this first swing, takes us above this high here. So conservatively, we can look for the market to attack this high here at 1.4440 and even towards this high here, as this swing projection and this other swing, this larger swing projection suggests, going up to 1.4460, 70 level. Okay, so that's currently the swing projection. When you look at the RSI, you see that actually the momentum hasn't been very impressive yet, the bullish momentum. In fact, if the market here fails to reach this high and starts declining, we get a couple more candles in this 1-hour chart to come down to close lower, then we would have a bearish divergence setting up here. Okay, and then if the market can return back below this pivot at 1.4320, then the bullish outlook has fizzled, and we can be considering the bearish continuation. Okay, this bullish action isn't only in the short term, because when we look at the 4-hour chart, the medium term price action or market action has been sideways. The 200 moving average, after rising, has flattened and even dipped a little. There's a little bit of a bearish bias here towards the in June. Okay, so June we had these very sharp declines, but now the market is sort of in congestion, but with a bullish attempt. You see the RSI, which represents the momentum of the market, is rising above 60, and when the market is bearish, it shouldn't break above 60. So now it is breaking above 60, but we've seen that last time when we cracked 60, the market came back down. So here we have another attempt. If the market clearly breaks above 60, fails to break back below it, we are likely establishing bullish momentum in the short to medium term. And we saw, in this chart, the 4-hour chart, we see another swing projection, this one towards 1.45. Yeah, so this is actually what we saw in the 1-hour chart as well, right? Here's the 1-hour chart, this swing projection. Okay, so in the short term, we have some upside risk towards 1.45 still. And actually, if you look at this larger congestion pattern, we could even break the 61.8% retracement level, break 1.45, go towards, right now, 1.4530, 1.4540, and still be within the context of sideways market, in which scenario that would represent resistance and a bearish outlook in the short term. So right now we have bullish outlook in the short term. We're going to test medium term resistance, which would signal, and if that resistance holds, it signals a short term bearish attempt. And you see, in this kind of ranging play, what we're looking for is the market to return towards the 200 moving average here. The further away it is from the 200 moving average, the more likely it's going to bounce back towards the 200 moving average. So right now, this bullish attempt, I wouldn't be very, we already crossed the 200 moving average, and the further it goes, the more likely it will return. So I'm not very confident on the current bullish outlook in the euro dollar. Okay, but when the market gets close to 1.45, I would start growing anticipation for the bearish outlook in the short term to return back towards this 200 moving average, perhaps towards this pivot here, 1.4340, down all the way down. So this pivot zone actually, 1.4320 towards 1.4340. Okay. All right, and of course a break below that, as we saw in the 1 hour chart. Did we see that? Yeah. So this pivot, right? You see all these resistance, support, resistance, back here support. So a break back below that returns the market towards the bearish outlook in the short term, but again in the medium term ranging. Okay, so that's the euro dollar medium term ranging. Now the daily chart shows that this ranging action is coming after bullish action, okay, since June of 2010. It's almost a year now since this rally. Okay, so basically that means, when the market is testing this resistance, I would be, let's put it this way, I would be more confident of a bounce from the support of this congestion than resistance from this congestion, because the previous trend is bullish. The RSI, you see, attacking 40, failed to break below 40. So in the bullish mode, the RSI should stay above 40, and it has been. And here again, so it pushes back above 60. We have this projection in the medium term, longer medium term, towards 1.50 actually. Okay, so it's just we're observing this congestion. I would put lesser weight on the resistance than on the support here. That means if the market, say here, comes back from this resistance, look for this support to bounce off of again. Okay, so A, B, C, D, E, maybe that's what the development is into a triangle. Okay, alright, so that's the euro dollar, and yes, Boyke, this is the 200 simple moving average. Okay, Genius FX, great anticipation of risk event. For euro dollar, really a lot of the this is more of the long-term look, but within this triangle, there's a lot of shakes, a lot of twitches, as Ashraf Lighty pointed out. It's just twitching with all these new information from media outlets. All these headlines are just causing a lot of noise in the euro dollar in the short term. So, well, there you go, Genius. If you're on top of the market and you have good anticipation, good intuition, you could definitely take advantage of that. Okay, so moving on to the pound dollar. So the dollar's strength definitely held back, especially in the presence of euro strength right now. But the pound dollar, here's the 1 hour chart. Okay, Genius, I go down to 15 and 5 minutes. Okay, I guess when you trade, you also see the ticker moving, so I even look at that to see if I could shave off a couple pips here and there. Okay, so here's the pound dollar. What is this a double bottom? Is this a W, which means there would be resistance around here? I mean, there is resistance. We see it already. We see this tail, and the market basically right now it's flattening. It's not like reversing like the euro dollar. It's flattening. It's it's still also going back to the 200 moving average, right? When the market's ranging, it's like, oh, it's waiting for the 200 moving average. Maybe we have some more upside risk towards these lows here. But I would suspect, if the pound dollar is to be bearish, it shouldn't break above this resistance cluster here. Okay. Oh, let me draw this more precisely here as well. So there's this resistance cluster, not a very precise like level, but you do see this resistance cluster, and if it breaks above that, let's say 1.6130, then we could consider the market bottoming and maybe look for another swing after a throwback, okay, towards these levels. So the bullish outlook in the short term is very feeble, or very is still not open yet. You see the RSI still below 60 here. It resolved a bullish divergence, but that doesn't mean the market will reverse. Sometimes the market continues to be bearish after that. We already resolved that oversold condition, and if the market is back to the 200 moving average, or the 200 moving average catches up to the market, then we're not oversold anymore. Okay, so maybe that's what the market needs to do to get rid of that oversold condition, but that doesn't seem to have a lot of upside to it. Okay, here's your pound dollar in the 4-hour chart, and you see this channeling down. We saw this pivot here, about around 1.6090 or 1.61. Okay, so that would be the current upside in the very short term, but the market looks bearish in the medium term, slightly bearish. Let's zoom out a little. I would say it's ranging actually. We had this spike, but the market failed to sustain, so now the market is back to these lows and actually cracking these lows, right? Now, we haven't seen a sustained break yet, but it definitely showed some bearish intent here. We broke below this projected triangle, and now let's see if this pullback can be contained. If the market breaks this support turn resistance, in anticipation of resistance 1.61, we could look for the market to go up towards the 4-hour 200 moving average, 1.6220. Let's see if that remains below this low here. That would be a very deep pullback, right? That would be a very deep pullback. It would probably shake out most of the bears here, but the market hasn't returned to the bullish mode. It is still ranging. It's bullish in the short term, and then if it fails to break up above that, with the 200 moving average already turning south here, so we could continue lower. That's a very choppy scenario. Oops. But that can also happen if this resistance here doesn't hold at 1.61. Okay. All right. So going to the daily and see if that scenario materializes. Remember this: if you were here in the last Chartist corner in FX Street, we were probably still inside this triangle, but we had this similar projection. Downside after this pullback fails to break above our high here would give us further bearish outlook, towards, well, we didn't hit 61.8 yet, so that would be the short-term outlook towards short medium-term outlook to 61.8%, around 1.59. Below 1.59, we could look for 5670, some 8.6% retracement. before looking for this low here. Okay. All right. So the pound dollar, I suspect there's going to be choppiness because looking at the daily chart, we're pretty much back at the 200 moving average, right? Back to the median price action. So, there could be and when you look back, the market has some bullish bias. The bears haven't been able to push the RSI below 30, so, that's why I think there's going to be a lot of, fighting bulls and bears here, and possibly push the market back up into the triangle before further bearish action. But at the same time here, this would be the crossroads. If the market breaks above this triangle, breaks above this high, breaks above this triangle, we could be looking at a bullish return to the bullish mode. All right, so bullish in the short term, but in the medium term, we could be setting up a bearish signal. So look for the short-term pullback to give us more clues. Okay, so just to conclude, 1 hour chart, short-term pullback, 1.61 is our first level of anticipated resistance. Okay. Let's see the euro pound. Okay. So this is the 1 hour chart. Alright, so you see the euro pound in the 1 hour chart staying above 200 moving average here after a triangle, breaking out above. It's let me just move to the 4 hour chart. You see it's breaking above this high here, breaking above this projected trend line, RSI going back above 70. So very bullish. It's this in the medium term has been ranging, right? It's bullish in the short term, nearing some this is 2011 high, going towards the 2011 high. So let's go to the daily actually. Okay. So in the daily chart, if we break this high here, our next pivot is this 0.9150 level, which is also this swing projection. Okay. We have also this more conservative swing projection that would break above 0.9040 and go towards 0.9080 area. Okay. So euro pound looks a little bullish right now. Let's see how we can confirm that. Looking back at the 4 hour chart, you see here that this high here should become support once the market, let's say the market comes up here, comes back. If this area remains support, we should see the euro pound continue this rally towards our 2010 high, I believe, back towards 2010 highs here. And then you see after that we have this high 0.94 10 area. Okay, those are your bullish projections for the euro pound. Let me move on now to dollar yen. Okay, so dollar yen indeed. Okay, so dollar yen in the past I was looking at this in terms of congestion. Let me go to the daily chart. After this wild volatility, I've been saying the market should be in congestion. It was in congestion for just a little bit here, and now the market is breaking back out. Although, candlestick action is still within the same volatility as the candlestick action we've seen all along here. So nothing very impressive in that breakout, but still a breakout nonetheless towards the upside. Okay, so let's see. You see also the RSI failed to break below 30 previously, so there wasn't an establishment of bearish momentum after here, we did break above 70. So there is still that slightly bullish tilt, but I wouldn't consider that much of a tilt. The market is pretty much ranging here. So if it's ranging and the market should go back towards the 200 moving average. We also have this high here at 82.25, so that would be your short-term target at the moment, 82.25. In the near term, here's the 4-hour chart. We had the swing projection after the breakout of this trend line. And here we have a little consolidation. The market is holding above our previous high here, so that's a good sign. RSI breaking back above 60. If it kisses 70, that's also, breaks above 70, that's also a good sign of bullish momentum. And, after it, if we get a pullback, a throwback, and we again respect these highs here, then we could be going towards the 82.25 high here. Okay? The market obviously doesn't have to follow this path, but if this path is what develops, then there's a good high likelihood to go towards 82.20, 82.25. Okay, the market might just as well give you a very maybe a very sharp move and then not even any of a retracement before going up like that. So can't always get a full throwback. Okay. Let me see. Let me move on now. I guess in the dollar yen in the daily chart, you see it's just ranging, and in the medium term, there's not much trending action until we can see a break above 85.50, a break above 86. Okay. All right, moving on. Genius, I like doing these webinars. I like to share my outlook on the market, talk about it, keeps me honest, keeps me in tuned. And if I also like to hear what you guys think when you see certain patterns or whatnot in these charts. So we just share our views on the market. Okay, so here's the dollar Swizzy, record low today, right? Going down towards 0.8275. Okay. So, in this 4-hour chart, we still, it's a little suspect to me. We have this wedge going down, wedging out fresh lows, but the RSI hasn't broken below 30. When the RSI breaks below 30, I'm more convinced of the swing projection we see in the daily chart, which goes towards 0.8155. Okay, so 4-hour chart again, I'm suspecting this could be a clear out, especially, let's see this 4-hour chart. If this gives you a doji and then a break back above our previous highs here and our local highs here, break above this declining resistance, break above this pivot here, 0.8360, then I would suspect the market to attack these highs here, 0.8550, 0.8555. Okay, only a break above that should we consider bottoming, right? Then that would give us a double bottom. But until then, this rally is always vulnerable to being faded. We have another pivot here, 0.8460, 0.8465. Okay, so our my bullish outlook is very light, very cautious. Only a break above 0.8555 should we start looking for bullish reversal. So in the daily chart, you see, I've been channeling down here. We have a bullish divergence, so maybe I wouldn't be that aggressive for the swing projection to go towards 0.8155. Okay, so 0.82, maybe we missed this target, but yeah. At the same time, the bullish outlook isn't very attractive neither until we break above 0.8555. Okay. All right, let me move on. I'll take a look at that in a little bit, genius. Okay, so here's the Aussie dollar. Interesting pullback. This was in a little channel, but now we are in a throw over. Okay, breaking above the resistance, going towards 61.8% retracement, which is at about 1.05. Let me see, 1.0530 area. You see the 200 moving average also there as well. So we have resolved the bullish divergence. RSI actually establishing some short-term bullish momentum, but this still could be classified as a corrective rally. Okay. Let me go to the 4-hour chart. Okay. So if this corrective rally extends further into the medium term, we could rally towards the resistance level, resistance of this channel. Okay, which could be around 1.06, and that's the 4-hour chart, 200 moving average. Okay, so upside right now, if sometimes this is what happens. You get some kind of correction like this, then you break, and then if this fails this low, you get another corrective pattern, and this turns into a more complex and possibly extend into the medium term. Okay, so that's one scenario we could look for, or we have to maintain in the back of our heads if we are looking for a bearish continuation. If the market breaks below these lows, then we could be more confident of the bearish continuation, and that outlook, looking at the 4-hour chart, looking at the daily chart actually, the bearish continuation outlook in the medium term targets towards this 1.02, up to 1.0250 zone here, which is near the 200 moving average in the daily chart, as well as the 61.8% retracement level. Alright. Okay, so that's the Aussie dollar. So we're moving pretty quick today. So let me just zoom in a little bit and assess the corrective pattern or structure we have here. Since May 2nd here, we had this A, B, C, D, E 5-wave decline. This is a declining wedge. Then the market broke above ABC, this connector, and now we're in this declining channel. So maybe this is in Elliott wave terminology, there are structures like double fives, and this, at least for now, looks like a double five developing, in which we have A, B, C, D, E, corrective A, B, C, then another A, B, C, D, E. So that would be in line with this bearish swing projection towards 1.0250, 1.02. Okay. By the way, if there are any pairs you want me to look at that I haven't gone through yet, let me know in the chat. Otherwise, I'll just go through here. Now we're going to gold. So gold, very sharp decline here, right? I think we probably finished a 5-wave decline. 1, 2, 3, 4, 5. No. Or, no, 1, 2, 3, 4. We could be still in 4, and if the market doesn't break above this pivot here, I will look for another decline. Okay, so we are trying to round out a bottom here. This is, we see these patterns a lot. This little, double bottom, and then here we consolidate, but keep the market above the middle of this range. And that just shows that we are trying to bottom out here for a little correction rally. Okay, Let me go to 4-hour chart. All right. So for that bearish momentum, bearish scenario, failing to break above these pivots here. Again, it's not going to be a specific level. It could go all the way up to these levels, and you have to give it some breathing room. As long as it doesn't break above this high here, we should be good. It can actually break this. Okay. And now the bearish target is about 1490. I'm sorry, 1475, and that's where we have all these resistance support pivots. Okay. So gold does look like it is in a little correction in the daily chart. You see this failure to reach this high here. Now we break below this little range, and that targets towards 1475. Okay. All right. So that's gold, and silver is also pretty bearish in the short term. This is the 1-hour chart. Okay. Similarly, we are similarly trying to bottom out here. We have this sharp rally, then we have we have consolidation right now. Again, just like gold, we could expect some kind of rally here in the short term, resolving this bullish divergence in the RSI. In the 4-hour chart, you see we actually reached some, pretty close to these targets already. So unlike gold, silver's already down towards these support levels. Okay, but silver in the medium term, if you look at the daily chart, has actually been a little more bearish than gold. Okay, this decline here was very sharp, and now we have this little congestion, and therefore we're looking for the market to come down towards the 3230, 3130 level, test the 200 moving average and these previous highs. All right. So that is silver. Now below those lows, we might get to that soon, actually, in a next week or something like that. And if the market does break below that, we should look for a possible test of these lows here to completely reverse this rally we had in 2011. Okay. All right. Yeah, this is a very silver. This may have just have this exhaustive blowout rally and such a sharp decline. Okay, so let's move on to New Zealand dollar. All right, so this is the 1-hour chart. We see in the 1-hour chart we are slightly bearish, but now we failed to break below these lows, and we built a little bottom here with a sharp rally. Still, bearish in the medium term for me. This is bullish in the short term. Let's go to the 4-hour chart. You see Rsi here also breaking above 70, so that is confirming some bullish intent in the short term. But in the medium term, here's the 4-hour chart. We had this topping. We had this, I guess, confirmation of topping, and then this decline. But this decline failed to further confirm it because it failed this low here. So we are just still trying to confirm this top. Okay. Let's see. The RSI broke below 30. Here we had a very uncomfortable break above 60, but the market broke back below. Failed again to establish the further bearish momentum. So let's see if this RSI, when it comes back towards 60, whether it would sustain. And also price action, it's pretty bullish now, so I would anticipate some further bullish follow through towards these highs here. And again, if it misses these highs, see, we would be developing lower highs, and then another lower high. Then the bearish outlook is still valid back towards these lows here. 61. Now that it has flattened out more, I wouldn't be very aggressive in the bearish outlook. A bearish swing towards 61.8%, 0.7960 area could be our target if this fails these tops here. Okay. Moving on to the dollar loonie. Let's see. 4-hour chart. Last time we talked about this, we were looking for a very choppy dollar loonie towards parity, and it's still very choppy, but it still hasn't reached parity. Okay. Okay. Sure, Boyki, okay, so I see Euro Yen. I will get to Euro Yen, Alex. Why do you analyze bottom up and not top down? Do you mean going from the larger perspective, the longer perspective, going down towards the 1 hour? I look at both, I'm usually the larger perspective hasn't changed in my mind. When it does change, it usually comes from the short term. So, first thing I look at is the short term. But of course, once you set, of course, you start with the long term. So you set that up, then, the long term look is not going to change. All the changes are in the short term, but once the short term look, but you always have to check the long term look just to make sure. But, you always, once you have that long term perspective in your head, you could start with the shorter term and move up. Okay? I hope that answers that question, Boyki. Let me move on. Okay, so dollar loonie, choppy. Wouldn't be surprised if this market returns back to a 200 moving average again, right? It has done it here, done it here. These were deep retracements. This one could be another deep one. Although we finally in the RSI in this 4-hour chart broke above 70. So we had this first break above 70. Then the market, was very choppy. The RSI just showed us ranging action, even showed us some bearish bias. But now we are regaining this bullish bias. Okay. So now, see ya, ML. So now we have this correction to this rally. So let's stalk this correction. These are pretty sharp bearish candles. But now we are testing this resistance, right? Let me see what retracement level that is. This is 38.2%. You see the market, I would look for the market to find support around 61.8, 0.9780 area. Okay. So this is a sharp decline that I would look for deep decline, because the nature of the market recently has just been so choppy. All right, moving on. In the medium term, after we continue to attack this parity level, we will know if we can establish a bottom. Okay, so currently we are still below this 200 moving average. Even a break above that we're not in the clear, because the parity level here, we have these resistance pivots that should provide a lot of, provide for a bearish attempt here. A break after that, a break above that, then gives me more confidence of the bullish outlook. But for now, I'm playing this as a ranging market. Okay, looking for a large swing back towards these lows, but missing it. But now, if that breaks, the whole scenario, this outlook breaks as well. Right now, it's intact because we continue to make higher lows. But if we start making lower lows, that means the market, that means the bulls have failed to push the market above parity. and we could then look for the market to first of all retest this inverted head and shoulder neckline at around 0.9680. Okay, so that would be your short-term bearish outlook from these levels. Then below that, you could look for these lows, 0.9445. Okay, let's move on to the euro yen. Okay, very sharp move the euro yen, right? This is the 1 hour chart. Let me actually go to the 4 hour chart. And what we have here is a double bottom, and this is great. The double bottom break is also breaking the 200 moving average. The RSI, you see a break above 60, and now it's sustaining that above 60, about to hit 70 and give us some short to medium term bullish momentum. Now if the market sees resistance here, comes back, but is either supported by this 200 moving average or even down here, but fails to break below this low, then we should be looking for a bullish continuation in the euro yen. Okay, but until a break above 116.70, we're not very bullish on the euro yen. We're bullish in the very, very short term. Break above that, in conjunction with support here, should then provide more impetus to rally towards, let's go to the daily chart. You see breakout here. No, rally towards, maybe let's use a retracement, Fibonacci retracement. Okay, you see the market is ranging right now, right? So I would, there is a little bullish bias, but the market is going back like this. It's ranging, there's a breakout, there's a test. So now we could be in a slingshot. So this could be now from ranging to bullish. Alright, so I would look for a deep correction towards at least 120 area, right? This 61.8%, 119.60, 120. Alright. And actually, if the market breaks above this high here, okay, we could look for an even deeper or a stronger aggressive rally towards these highs here. Okay. Okay, let me move on. 4 hour chart. Alright, pound yen in the 4 hour chart. Okay, let me see. What's your day like, Sam? Are you on salary right now? Do you work out of the office with people? Well, I manage FX Times, and I'm also doing some trading here and there, and providing a lot of content on FX Times. So, I appreciate it if you guys check out my website and support me there. Thanks, Genius, for asking. Okay, so here's pound yen in the 4 hour chart. As I mentioned from earlier in the week, this label appeared when we had this test here, failed, and then we had these supports lined up. We failed to hit this resistance, but it's still within the context of this declining wedge. The market came down towards 128, which actually, if you look at the daily chart, we had this projection, right? One swing, two swing, third bearish swing towards 128. The market failed to hit 128. It bottomed at 128.23, and now we are returning. Okay, let's see. Let's look at some of these pivots here. You see this one right here, which is our recent high. Looking at the 4 hour chart, that would be this pivot, 130.50. So market right now on its way towards 130.50. Of course, it needs to clear this declining wedge resistance. Most importantly for me, the RSI should break above 60. It was interesting, even up here, I mentioned that we have a very bearish market, very bearish price action, break below this channel, staying below 200 moving average, but the RSI was never able to push below 30, and that's actually a sign of that's a suspicion that raises suspicion for the bearish momentum. There is no confirmation for the bearish momentum here. Okay, but of course on the other side we don't have any bullish establishment neither, bullish momentum established neither. And the first thing to do that, the first clue to show that would be a break above 60, and then if it breaks above 70, we have a good chance we are in a breakout. Well, first of all, we by that time we are already in a breakout, but then this breakout could become a more significant rally, not just a very short-term, correction. If we have a short-term correction, okay, so let me talk about the short-term before going to the medium term. A short-term correction, we break above this, maybe we get some kind of a pullback, and then that would give us more of a head and shoulder pattern. And then we still are vulnerable to resistance here below these lows. Once we start making higher highs and higher lows, breaking above the 200 moving average, staying above the 200 moving average, then we can start looking for a medium-term rally. So this short-term rally is, for me, going up towards 1.3160 area, 131.50 to 131.60 area. Okay, but if you look at the daily chart, we have basically 1, 2, 3 swings, and that should complete a corrective pattern. Now all these rallies and declines are corrective in nature because there's no trend right now, it's just ranging. Okay, so this now, if it breaks above our, let's see, going back to the 4-hour chart, if this extends, breaks above this high here at 135, around 135, we should be in quite significant reversal in the medium term. You see, push above that towards 140. Okay. Be careful because at around 135 or near these highs, I would suspect in the short term for the market to provide some resistance and push towards the 200 moving average. Okay, so short term bullish, medium term still ranging, and the maximum bullish target at the moment is 135. We have the short term bullish target here in the 1-hour chart, in the 4-hour chart, towards 130, 150 before we consider 135. Okay. Alright, so let me see if there are any other questions. Oh yes, and by the way, Genius, to the second part of that question, I do work with Nick in the office. Okay. Alright, so that pretty much, I want to get to the question part of this webinar. If you guys, or the sharing part, if you guys have any different outlooks or projections for the pairs that I looked at, or if you have any questions or requests for any other currency pairs, I'll be open to that in the chat now. Let me just go back to the euro dollar. Yes, it seems like the whole FX world is just staring at the staring at the Greek crisis and what's gonna happen to the euro. Okay, so for me that means if the market breaks above this triangle, right, that probably means that in the medium to long term, hey, the Greek crisis probably would be brushed off. It could still return, but as always, but the market sometimes needs to focus on different things. It shifts attention. Sometimes it has short attention span and allows for a breakout. Okay? You can lead them. Oh yeah, a lot of uneasiness in Greece. Alright, so that's it for now. I'll still hang around for a little bit for any questions or shoot the breeze in the chat. Okay? Thank you guys for your attention. See you next time. Vicky, I haven't actually scheduled the July date, but you'll see me again in July.